All right. That was weird. It glitched out a little bit. I didn't know if this was going to happen or not. Can you hear me okay, Megan?
Yes, I can.
Okay, awesome. So, another Friday live. We're doing a live stream here with Megan Marsh, and my name is Brian Weiss, and we're here to talk about the concept of franchise in the mortgage industry. And I know that that concept sounds so foreign to so many people, but when you really think about it, it makes perfect sense for a lot of reasons. And here we're talking about why that makes so much sense to a number of people that are in the mortgage industry, right, Meg?
Yes. No, it was foreign to me when someone came to me with the idea after I'd written a course about, hey, have you ever thought about franchising the model that you've built? And I'm like, can you even do that in mortgage? Like, I didn't understand it myself. And I had to take some time, about a month, to consider if we were going to do it, why. And I kind of had like a light bulb moment that made me decide to move forward.
You know, it's so funny whenever I bring it up to people, the first thought is franchise. Okay, so like submarine shops, McDonald's, Subway. What is this? And it's, conceptually, yeah, that's exactly what it is. It's providing a platform and a framework and a way of doing business that's efficient, that shortens the learning curve and greatly reduces the risk. Like, that's why you would open a Subway versus opening your own submarine sandwich store, right? Because the systems are built. If you look into the franchising industry, and I have, because I'm a little bit of a nerd like this, but you look into the industry and it's not just food service. I mean, it's CPA firms, it's accounting, it's tax preparation, it's business services. It's a lot of professional services also, because the model itself makes so much sense. And you told me, Megan, when we first started talking about this a while ago, you had told me that franchising in mortgage is very common in Canada. It's very common in Australia, but not common at all in the United States. And why, you and I have talked about this, but can you share why you think that is? Why hasn't it become all that common yet in the United States? Is it a regulatory issue?
I think it's part of it. That was another thing I found when I was doing my research, and I'll answer that question here in a second. But the light bulb moment for me was, I was opening my third brokerage. I never planned on owning my own business. Opened on my own. Opened a second one with a business partner. We even went to retail because we're like, oh, like, this is so hard. Like, I think it would be easier to go where there's all these systems. And we did that for 1 year. It was not a good move. We couldn't close as many loans. The rates weren't as strong. We didn't have control to do things in our local community. We switched back, and I'll never forget it. We grew and brought on leadership, started creating actual systems, like really good systems. And my father, for years, when I had been frustrated, or I had called him because he owned a business, and I had, I was complaining or crying to him over something I was dealing with. He kept saying to me, you need to call and ask your brother. You need to ask your brother. And I would always brush him off, and I would just be like, whatever. Like, I'm not calling Chris. I'm not asking him. Like, I'm doing this myself, being stubborn. And it was the year I decided to do this. I drove to vacation, and I got there, and I was like in the best mood. I had this leadership team. We had all these systems. And I remember sitting there, and I'm trying to make the decision, and I'm like, oh my gosh, Chris owns a State Farm agency. He is part of a franchise model. He didn't have to go through all the years of learning that I had. Now, of course, any business owner goes through learning, but it was so much easier for him that he started realizing the income and the time freedom of owning a business a lot quicker than I did. And it really went off for me that if I could have had what we have now 7 years ago, how much more money I would have made, how much easier it would have been. And so that's why I started looking into it. Now, you asked other countries, certain countries are, they have banks like we do. And then they have the broker environment, and Canada, Australia are two. Australia specifically was the country I looked into. They don't have the same regulatory environment that we have. I mean, there are literally, I don't know the exact number, but I mean, I'd be willing to guess there's close to 20 franchises. It's kind of like real estate in our country. And they have all these franchises. And I've read about it that, and even their mortgage brokerages, they don't just offer mortgages, they offer other products. They offer business type products, which is where we started integrating that into ours, because I think as finance professionals, mortgage professionals, we do need to start expanding a little bit with how the market's changing. And I think because they never had the regulatory hit, which we did, if you remember in 2008, the brokers made up, I think, around 40% of the market. And I mean, I was a broker back then. I remember coming into work and like a bank would be closing, another bank would be closing. And as a broker, we just flipped and switched to another. We lost Brian here, but I'll keep going. We switched to just another lender, and I stayed with it during that crash. And I stayed a broker, but I want to say brokers went down from like 45% of the market down to about 10% of the market. So many people went into the retail space. And that's when like the whole branch model came about. And so once people really went into the branch model and, banks started becoming bigger and bigger, I'm sure they didn't want to lose all these loan officers. So a false narrative started happening that, oh, it's so much easier to be, in retail, it's so much easier to have a branch than it is to be a brokerage, to own your own company. And I think that, it's been a journey for mortgage brokers to get back up from 10% of the market to where it sits today, which is in the 20s, the mid to upper 20s. But I just got back from a conference, and, we are continuing as mortgage brokers to increase our market share because we save customers money, on average over $10,000. We save customers money. Our technology is better than almost all the retail loan officers that are joining our group. When they see the technology we have, it is superior to what they were receiving. And so all these things that they've been told for years, they're finding out is not true, and their business is growing, and it's creating a really positive environment for the loan officers that are coming on board. And how that can help real estate brokers and agents is that it means it's going to be easier to integrate this model into your business. And he's back.
Back. My camera died. Sorry about that. I could hear you. I just couldn't. The camera wasn't.
Okay, so you heard me. So
yes.
So I just kind of finished answering about brokers are coming back. In the conference I went to, they're saying they're expecting brokers to get back up to that 40 to 50% market share. It just keeps happening. And a really cool thing that happened at the conference I was at, okay, mortgage brokers, we don't have access to stuff, because when you work at a big bank, retail company, you've got tons of people pooling resources. Well, that's kind of the idea with the franchises. You have people owning their own businesses, but now pooling their resources. And we're sitting there at this conference, and one of the new accounts that they just released for mortgage brokers, is CoreLogic. Like, we could never have CoreLogic. Those accounts cost thousands a month typically. Even smaller real estate brokerages haven't always had access to something like CoreLogic. And now they've made these accounts because as we keep grouping together and pooling resources in our associations and our companies, we're going to keep getting the best of what other big companies are getting. And so the franchise model is such a great way to step in, not have to go through all that crud the first 5 or 6 years, and be able to step in, focus on growing your business, creating a business that can, survive without you, that grows through other people producing too. And, and you have the systems.
Yeah. So you can shorten the startup time. You can share resources within a group. I was on the meeting with all the franchisees and our loan officers this morning, where somebody shared something that they learned and everybody learned from that, right? The tagline that we have, I love, which is in business for yourself, but not by yourself. It's collectively leveraging resources to run the mortgage platform so that it takes the heavy lifting out of it, and therefore the business owner can focus on business development and sales rather than just running the business. So it's it's a lot of cost savings. So then you take that to the next level, and we've talked to a number of loan officers that have joined the franchise system, moving from retail. We onboarded one yesterday, and we heard from one of our newer ones this morning on the call. But also, we're doing this with a number of real estate companies. So real estate companies, and here's where it gets really interesting, because traditionally, and I've been in mortgage for decades, you have too, traditionally, real estate agents will take their time, effort, money, and invest in generating a client. They generate a lead, right? Then what happens is one of the first questions is, are you pre-approved? No? Great. Here's a preferred vendor. It's then the loan or the lead is immediately referred out for their mortgage. Well, the revenue associated with that lead goes out immediately with that referral. And, the loan officer deserves to get paid for a job well done, but the revenue that's left over to support that mortgage company platform doesn't need to happen that way anymore. That revenue can actually stay in-house. You can have an in-house relationship where it's a better experience for the customer because it's consistent communication. It's cheaper for the customer because you're not spreading that revenue amongst so many different layers. And it's a win for the real estate company because they can pick up that additional revenue. It just makes so much sense.
Yeah. And when we built the model, we first built the franchise part so that, most franchises are somebody comes on, they have everything they need, or they're directed to what they need from owning and running a brokerage for 20 years. We really wanted to step it up a bit. And so we don't just have the resources for the mortgage broker owners, we still have a corporate franchise that's running, and those trainings, all of our franchises, all of our partners, they get to come into those, they get to have their loan officers come in. And we did that because as my family owns a real estate brokerage, how would they want to partner up and have their own mortgage brokerage? Well, they would want to focus on real estate, and they'd want to make sure that they had what they needed on the back end to have that business run. And so when we built the franchise, we also built what's outsourced operations so that people wouldn't have to be like, they've always gone into JVs for that reason. Well, now you can keep your business and you still have operational support. So it really is built for both the loan officers and the real estate professionals.
So traditionally, we've done as a mortgage industry, when we partner up with real estate companies, we've traditionally done desk rental agreements, marketing services agreements, affiliate agreements. We've paid for events, or covered the cost of events as part of the partnership, and that helps. Like, that little bit helps. But what I'm finding in these models that I'm doing is we can triple, or in some cases 5x that amount of revenue by setting up a partnership that is a true in-house, 100% owned by the real estate company. And traditionally, those types of relationships were only reserved for the big companies, right? So the big companies out there, I won't name names on this call, but we all know who they are, where they're so large and they're able to invest so much capital, they hire teams to run the platform. Well, now we've created this model where you can leverage our teams at scale, because we're doing this for multiple companies at the same time. You can leverage our platform, which is a low cost for you, and then therefore be able to maintain that revenue and have somebody else that understands the business build and maintain the platform, while again, you're focusing on sales and customer service.
Yeah. And I think the last piece that I want to mention that I've learned also while doing this is, I think a lot of us in the industry on the mortgage side, as loan officers, we get in, we can really have a career changing experience, make really strong income, just like real estate agents can. And we don't really think about like our business as a business. And how I compare it is, if you buy a rental property. So you buy a rental property. Would you just buy a rental property for the monthly cash flow? No, you buy a rental property for the cash flow, but also because when you sell it, you're going to have something. You're going to, my dad owned a business. That's how he retired. He sold his business and received the equity he built. And I think a lot of us in this industry, like, we're never taught this stuff. And so building a business that has equity that someone else will want to purchase because there's systems in place, because there's things that make it easier for them to succeed. That's why if you go look anything up, a franchise business is typically worth more than a independent business because there is a system to it and it's more comfortable for someone to be able to step into it and purchase your business.
Yes, yes, yes. And I think that's the other key benefit that I talk to about people is that by owning your own mortgage company, you are increasing the value of your overall company. So you and I have talked to a real estate company owner recently that owned his own mortgage company and sold it as a package to the next investor.
Right, because he probably got a really great offer. You made this circle. It's almost like you make all of it residual because it feeds off one another.
Mm-hmm. Yep. I love it. Okay, so we've always promised folks that this would be relatively short, quick hit bits of information. Let's share where they can go for additional information and maybe wrap this up. And I think the best spot is probably the website, right? Becomeamortgagebroker.info is a great site to get information. Yep. And of course, joining these calls every Friday.
Yeah. And if you're watching this, I know a lot of people find our our YouTube channel. You can leave a comment if you're watching it later, and we can answer those questions on next week's each Friday. We're coming on here. If there's a certain topic around it that you want to hear, please leave a comment and we will make sure that we talk about that question that you have. It's how we know that, we're answering the right questions.
I love it. Thank you for doing this again. And please do, everybody, leave your questions, reach out to us, and we're happy to help.
Thanks, Brian.
Yep. Bye-bye.
Bye.